Hello everybody, Backyard Bullion here. So today being Wednesday means it's time for another ponderous topic for us all to get our teeth stuck into. And this week we have a doozy. We're going to be talking about capital gains tax. I think it was Benjamin Franklin who once said there are two things certain in life, death and taxes. And capital gains tax is very much that tax which can sting you quite badly in the world of gold and silver. And it's one which plays a large part of a lot of people's decision making, but it's also one which is overlooked by a lot of new stackers, and certainly myself included. I never thought it would be something which I would take attention to, but as situations change and evolve and grow over time, and you get the gold and silver bug and you start investing more and more in gold and silver, it certainly has, for me anyway, become a really important factor in my decision making and goal sort of setting and strategies going forward as to what I'm going to be stacking, how I'm going to be stacking it for the future. So yeah, today very much just my own thoughts and opinions on the subject though, so that's something really important to remember. I'm not a financial planner, I am not a tax advisor, so any decisions you make having watched this video are yours and yours alone, and I would highly recommend that everybody goes and looks at their own personal situations in terms of capital gains tax and how it affects you in the country that you're based in, because today I'm going to be talking about how it affects me as a British citizen, as a UK resident, as a UK taxpayer. But it might be an incredibly different situation for you if you're in America, and it could vary state to state, I don't know. But it'd be great to hear your thoughts on capital gains tax in the comment section below, finding out what the different rules are for where you're based. So please do comment down below. Now I've got here on the table an eclectic mix of silver and gold to talk about as I go along. Some of these are capital gains tax exempt, and if you're brand new to the subject, a really fun thing to do would be to try and work out in your head as I go along which pieces are capital gains tax exempt and which aren't, because it's a really important thing and quite a fun thing to do along the way as well. Now, capital gains tax, what is it? Well, in the UK, now a lot of the information, before I get started, a lot of the information I'm getting today about capital gains tax is coming from the .gov website, really useful website for getting all of the sort of really intrinsic advice that you need to know about capital gains and various other bits and bobs of taxes and things like that. So there's a link down in the description below, go and check it out. So capital gains tax, what is it? Well, basically capital gains tax is a tax which you will have to pay if you make money basically on an asset. If you buy something for a certain price, like say this 50 pesos gold coin, if I buy this for £1,100 and then let's say in 30 years time I sell it for £4,400, let's say gold price has quadrupled, that would be lovely. I've made a profit of £3,300 on that. So that's a capital gain, and it's something like that you would have to pay taxes on. And that applies to other assets as well, and the example that they give on the .gov website is if you buy a painting for £5,000 and then you sell it for £25,000, you make a profit of £20,000 and you have to pay tax on it. So it is the way of the world, it's just another way that that governments can basically get tax, and as Benjamin Franklin said, two things certain in life, death and taxes. Now the good news is there are a lot of different exemptions for it, and if you're clever and smart about it, investing in gold and silver, it's not a tax that you really have to worry about, but it's certainly something you have to think about, and it does affect the way that you might look to buy gold and silver in the future. Now the first thing to say, just some of the stats and figures about it. So the rate at which you pay tax on this is 20% on anything above your annual allowance. Now your annual allowance of capital gains tax is £11,300 per person. Which is great. So if in this situation where I bought this for £1,100, sold it for £4,400, I wouldn't have to pay any tax because it's within that tax-free allowance of £11,300. Now the really good news is that there's a way that you can double that tax-free allowance as well, and that is by getting married or going into a civil partnership, because you can gift assets within a civil partnership completely tax-free, and you can take advantage of the both of you allowance. So doubled up, it's £22,600. So you might be thinking, like I did right at the start of this journey, that means that there's a huge kind of capital gains allowance that each person or each married couple has every year, and it's not necessarily going to be something to worry about. Well, yes, that's very true, but let's take this example here again. So you've bought this for £1,100, you sold it for £4,400. Now let's say that you had 10 of these. So you've then made £33,000 profit. That's a lot of money, and that is above certainly the £11,300 if you're an individual, and above the £22,600 if you're a married couple. So that is then, you would then pay 20% tax on the difference between £22,600 and £33,000, which is quite a chunk of money, and that really will hit a lot of people's plans. So there are different ways around that, and one of the ways around that is you could, not release the entire asset straight away. You could do it in phases, so that in 1 year you only earn the allowance, and then the next year. But then the problem with that is that gold prices fluctuate, and if the bottom fell out of the market, or if there was a huge crash or something, then that would affect your potential return on investment. And also, if you needed that money straight away, perhaps if you were looking to buy a house or go on a world cruise or something when you retired, then you wouldn't necessarily be able to release all of that asset. Now, the other good news is that there are coins which are exempt. Now, I've been ignoring them for now, but you can probably tell from the table that there are some on here which are, and those are UK coins. Now, in terms of just general rules for other capital gains allowances, you actually won't find coins on the .gov website. I looked all around the information sections, it's not there. However, there are laws in place which say basically all UK coinage, any coins, any legal tender coins, are capital gains exempt. And the important thing about these coins is that they are legal tender. So you can see here it says £100 on there, £100 on there. So technically these are legal tender coins for £100. You can go into a shop and pay, or into a bank and pay for them. Whether or not somebody would accept them, I don't think they would. They'd probably think they're fake. And there's a whole world of that as well. But technically speaking, they are legal tender, which means they are capital gains exempt. So if you had similar situation with the 50 pesos here, if you had 10 of these, but instead you'd replace them with 10 of these, and you make £3,000 per coin profit, then at the end of the day, all of that is exempt, which is great. So UK coins are exempt from tax, and that goes for everything really. So that goes for modern silver Britannias. So silver-wise, Britannias are capital gains exempt as well. Now you would have to stack a very large proportion of silver to ever really have to worry about capital gains tax, but it is something that you need to think about. For me anyway, let's relate it to my situation. So I've got a 30-year plan for my kind of pension stack, for my pension investments. I've got certain goals which I want to achieve each year in gold and silver. And that will then mean that at a certain point in my future, in my pension, I will be starting to release those funds. Now, I don't know exactly what I'm going to be doing when I'm 65. I could be looking to fund university education for children. I could be looking to buy a forever home for me to settle down in with Mrs. Backyard Bullion and retire to. We could look to completely up sticks and emigrate and move to somewhere in the world. You just don't know what is going to happen. For me, I like to have the opportunity and the option of being able to release the entire value of my kind of precious metal wealth, but at the same time, I don't necessarily want to do that. So to be able to kind of formulate those strategies going forward, I think is really important for me anyway, and something which you need to factor in. And one thing to do for that is to think about the ratio to which you have capital gains exempt coins and non-capital gains exempt coins. Now it's perfectly fine to invest in non-capital gains tax coins, and there's these two here are the prime examples. I'm a collector first and an investor second. I always have been, and I probably always will be as well. And if you don't enjoy your investments, if you don't enjoy your gold and silver, I don't think there's anything really that you should be doing more. You should just definitely enjoy what you buy. So for me, buying these coins, it's an enjoyment factor, it's a collector factor. I really do think they're great. But these are not going to be capital gains exempt. So for me, in the future, if I'm going to be selling an entire wodge of gold, I want to have a certain ratio to which I can protect myself. So if I make, let's say I sell 20 gold coins, 20 ounces of gold, and I make, let's just say for the ease of argument, £40,000 profit. If between the two of our allowances, £22,000, if at least £22,000 of that is non-capital gains exempt gold, then we're fine. So that means theoretically I could have about 50% of my gold stack in precious metals which are not capital gains exempt. However, if you are looking to that kind of future, that's just a cautiously optimistic gold price increase of a couple of £1,000s per ounce over 30 years, which is hopefully likely to happen, and that's kind of a preservation of wealth type scenario. But there's the potential scenario of a massive run on gold and silver, and it shooting the moon. And if that happens, if gold goes to, let's call it £10,000 an ounce, then you're going to make £9,000 an ounce profit per coin, per ounce of gold. And that is a ridiculous amount. That's just going to eat up your allowance straight away. And of course, if that situation happens and you want to cash in on that success and you want to cash in on that, that profit straight away, then capital gains tax is going to be a big, big factor for you. Now, the way that I look at it in that situation is that if, like, let's call it in a year's time. If in a year's time, you know, the gold shoots the moon and it goes to £10,000 an ounce for whatever reason. Now, let's say silver goes to a couple of £100 an ounce for silver. You would be probably quite stupid if you didn't want to try and cash in some of that gold and silver to release that funds, release that assets. You know, and if you're making £9,000 per ounce, or if you're making you know, £200 an ounce profit per silver coin, you're going to be laughing, you're going to be loving it, but at the same time you don't want to necessarily lose 20% of that to capital gains tax. So having the exempt coins both protects you for the long term, so that you have the option of being able to release an entire base of assets over time, or you can cash out in a short-term situation, and you can look to get a lot of those you know, returns on investment in the short term without having to worry about capital gains tax. So that's kind of you know, it really basically on capital gains tax, how it's going to affect me going forward. So that means that for me, in the long term, pension-wise, I'm going to be collecting you know, coins which are exempt. So there are a bunch of other different types of coins which are exempt, and those are old school UK coins. So any kind of old UK coins are tax exempt as well, which is really important. There are going to be a lot of different options out there in terms of gold and silver. There's pre-47 silver, pre-21 silver. There's old sovereigns as well, so you get all, of course, the old shield-backed sovereigns, things like that. These are all exempt, which is really, really important. You know, going forward as well, silver-wise, things like the big 10-ounce Queen's Beast are really great because they're going to be exempt for me as well. So those are not only ticking the collector's box, but they're you know, ticking that exemption box as well. But you know, there are things which I like as a collector, which I'm going to be collecting, like the Australian Kookaburra here, perhaps going forward. I don't know. So yeah. That's basically the whole situation as it relates to me. As I said before at the start of the video, I think it's a really important topic which a lot of people overlook. It's certainly one which I overlooked, and I would highly recommend that if you're new to the world of gold and silver, that you go and have a quick read about investing in precious metals. You know, and don't be afraid to change your strategies. You know, when I started in this whole world of investing in gold and silver, I didn't have any consideration for you know, this whole capital gains situation. But it's very easy to change your situation. You know, even if you've got a large proportion of non-capital gains exempt silver or gold, you can balance that out over time. And if you know, if you're not in that situation where you're going to be looking to release everything all at once in the future, and that's not your strategy or goal, then of course you can change your strategy to match it. But you know, if your plan is to hit 65, sell your entire gold stack, and then live off just that large cash lump sum, then perhaps you might want to have a think about what exactly it is you're going to be buying over time. So there we go, that's my thoughts on it. If you want to find out more information about capital gains tax, as I said, there's a link down in the description below to the .gov website. Highly recommend you go and have a look at that. Otherwise, please do share your thoughts and opinions on this whole subject. I think it's a really fascinating one, and it's one which is really, really interesting, and it'd be great to hear what your situation is if you're outside of the UK, if you're overseas, and what the situation is in your own country. If you like this video, please do put a thumbs up on it and share it around on your social media. That would be very helpful indeed. And if you haven't already subscribed to my channel, please make sure you hit that subscribe button with notifications on, and you'll get obviously a notification when I upload future videos. Otherwise, all that's left for me to say is a massive thank you to you for watching, and please make sure that you like, share, comment and subscribe for more.